Okay, let me just mute the YouTube here. Make sure everything's set up correctly. All right, looks pretty good. So there's a poll in the comment section there, just asking whether people think after today's big Fed announcement, are we going to rally? Are we going to crash? Just looking at the results now, it does appear like most people think that we are in for some type of market rally, which don't want to spoil too much of the video, but I tend to agree. That's kind of what I'm expecting as well. But of course, I'm going to go over two trades, one of which is for the rally, one of which is for the crash that might surprise several people in the comment section. But yes, so anyway, thank you everybody for showing up today. This is episode 39 for the Volatility Barometer. We don't have much time. We're a little bit time sensitive here because there is an announcement coming. So if you do want to participate in the trade that we're going to go over, make sure you open your trading software now. Of course, I do have to give the full silly disclaimer that we always do, that this is not trade advice. It is just educational, of course, all that blah, blah, blah. But if you do want to follow along with the trade, you can do that as well. So get that ready. I'm actually just going to dive into everything here. So what we're going to do today, of course, we're going to do the Fed Day announcement, talk about the two trades, bullish, bearish. I'm going to chime in on the whole Elon buying Twitter thing. The only reason I do that is basically because I get a lot of emails every day. And sometimes it is easier for me to just answer things in bulk instead individually answering all of these questions. So I'm on Twitter. People are curious about my opinion on it. So I'll go ahead and rant for 5 or 6 minutes on what I think about Elon Musk buying Twitter. And then, of course, we're going to do an open Q&A as always. So, yeah, grab your coffee. We're going to have to dive right into this because we don't have much time. The announcement's in about an hour, and we want to get the trade in before that. Thank you so much for joining me here today. I really do appreciate the support. So my name's Brent Osachoff. I'm a Canadian, and I'm a former professional golfer, so you will hear the odd golf analogy slipped in there from time to time. I run, I love movies, diehard UFC fan, and I do love to travel, so you'll see this background change throughout the year. So just give me 1 minute here to do a little bit of housekeeping before we get started. If you do feel like you need a little more structure in your investing, I do also manage a private investing community with members from over 65 countries around the world. And it's all centered around both of our diversified portfolios. You can choose the one that best suits your personal level of risk tolerance. There's a daily email sent out every morning with a ton of very useful volatility metrics at the top, which you can learn more about each one of them and start applying them to your own trading. There's a daily article or video where I break down some of the most requested topics from members. And then most importantly, of course, in every email, every day, I state exactly what position each of my strategies will be in, along with all the allocation sizing and risk management that goes with them. I've made it easy to follow so you can get the same consistent performance the VTS community has enjoyed for over 9 years now. No obligation, but if this is something you may be interested in, go to volatilitytradingstrategies.com, click the subscribe tab, and the monthly subscription does come with a free 2-week trial, so you can check it all out before committing. Thanks again for supporting the YouTube channel and spending a little bit of time with me here today. So let's get on with the show. Okay, so like I said, we are going to have to dive right into this. So everybody got your trading software open. We are actually going to get started. So of course, why are we talking about this today? Why am I referencing trading the Fed? Well, today, it isn't one of the quarterly meetings, but today there is actually going to be an announcement. And we are largely expecting a 50 basis points rate hike, and very likely it's going to continue throughout the year. So apparently, according to all the Fed officials, they're saying that there's going to be several of these, sometimes 50 basis points. There is several of them alluding to the fact they might even do 75s. We will see. I do have my doubts as to how far this can go, but essentially the reason we are talking about this today is we are expecting to be able to add one to the list here. So these are all the rate changes that they have made since the financial crisis. And of course, you can see the interest rates were taken basically to zero to put a Band-Aid on the crisis as it was happening. And then they held that for several years. It was basically at zero the whole time. And then they did go on that long run of basically on every quarterly meeting raising rates, 25 basis points. Little token raises, it didn't get very far. That's still well below the long-term average. but it was something. And then, of course, it culminated at the very end of 2018 with a 20% drop in the S&P 500. You remember the Q4 2018 crash. And then right there, December 19th was the last one. And December 24th, if everybody remembers, the Christmas Eve of 2018, was essentially the bottom in the market. And then it stormed higher for several months. So, I'm not saying that that's likely going to happen again, but I could see something like that going on where they're trying to raise rates several times. Eventually, they will do something and break the market. We will see some type of significant crisis. And then they will have no choice but to reverse course and start going back and doing some of these silly things where they basically just crashed it right back to zero. You could make a case, sure, it's a pandemic, you have to do certain things, but come on. I mean, they basically just unwound all of the slow, steady progress that was being done in a very short period of time. So I see something like that happening again. But anyway, we will probably see a 50 basis point hike. Now, this is already, if you're not aware, this is already the worst year ever to start for the bond market. These are, I don't know how many years this is. This is a good chart showing all the years of aggregate bond performance. And you can see here we are. This is April 27th, so this was actually a week ago. It's gone down even further since then, but it is the worst start to a calendar year. And certainly we're not expecting to see any type of recovery. If they're going to be raising 3 more times this year at 50 basis points each, this is going to be an absolute bloodbath for the bond market for quite some time. So if anybody's wondering, we did actually remove another bond section from one of our tactical strategies. So right now we are basically staying out of the bond market, so to speak. Even as safety positions, they're not really safety positions anymore. It's hard to imagine really making any forward progress when you've got the Fed have announced it up front. They seem committed to the process. We'll see how long it lasts. But, how can you really make any progress profit-wise holding bonds? So right now, I am going to get into basically 2 ways to trade this if you think either it's going to go up or down. So obviously, that's the first decision people have to make. Just make sure I'm on a screen share here. All right, good to go. So the first thing you would have to decide is, do you think we are going to rally or do you think we're going to crash further? And this is sort of a polarizing thing. There's going to be a lot of people on both sides of it. We are basically at the bottom. The market is down. I mean, it's recovered slightly the last couple of days, but we are basically at the worst of this recent, I don't want to call it a crisis, but certainly a decline in the stock market. This is pretty much as bad as it has gotten. So right now, it is not that difficult to imagine that there's a lot of market participants that are ready to see some type of rally. But then again, since we are at the bottom, it's not overly hard to see either that if they do mess up the announcement or the language or they surprise the market in some way, the bottom could really fall out. And this is sometimes just psychologically, anybody who watches my content, I don't really believe in technical analysis, but just psychologically, when you see levels like this, sometimes when you breach them pretty hard to the low side, the bottom can really fall out. So that's obviously on the table as well. So people will have to decide what direction they think it'll go. Basically, based on my polling and, the community emails that I get every day, I think more people are bullish than bearish. So the first trade that I will do is a bearish trade if you think the market is actually going to crash in the next couple of days. So just to kind of give you an idea of where this fits into what I typically do, I would say this is outside of my standard trading. So this is basically what my portfolio looks like. This isn't everything. I do have several other option strategies that aren't listed here, but these are the staples. These are the ones that I trade regularly, that pretty much every month they see action. And then I've got a lot of other strategies that just based on a certain environment, you kind of hit them hard when you get those good opportunities, and then sometimes they can sit there for a couple of months and not see any trades. And one of those strategies that is not listed here, I call it the lotto ticket strategy. So essentially, it is what it sounds like. It's basically looking for opportunities that don't come up very often, but when you see them, you can actually use it as an opportunity to perhaps make an outsized return. We're not trying to make, 5%, 10% on this trade, basically trying to double the money or more on these types of trades. So basically the way that people get themselves into trouble trading options quite often is they use this type of strategy looking for really big gains, and they get far too aggressive with it. The key, if you're trying to do that, now most of what I do is stable, long-term, consistent portfolio growth. But if you are looking for those big gains, the absolute key to it is to be very patient and only trade the very best setups. You should not be seeing these lotto ticket trades, twice a week or anything like that. These are trades that are reserved for only specific market environments. You're not going to be able to take trades on a regular basis that have a really high probability of making a killer return. That's just not how the market is structured. So be patient, but today obviously is one of those setups. So, lotto ticket trade, let's say a person thinks the market is going to crash. Well, what I typically do for these, you get the most bang for the buck if you're trading options to shorten the duration. So what I'm going to do is I'm going to do a 2-day trade basically. 2.5, including later today. After the announcement, there's going to be a couple hours. Likely the market will make a pretty significant move later in the day today. And then perhaps, obviously not written in stone, but perhaps some follow through Thursday and Friday. So this is the cycle that I'm going to be looking at. 6th of May, 2 days from now. Now, if you're looking for a bearish trade, this is another way that people often get themselves into trouble. They're always thinking puts and calls, right? If you think the market's going to go down, buy a long put option. You think the market's going to go up, obviously you buy a long call option. This type of trade, there are times when it can work, but you really don't want to do that when volatility is elevated. Right now, the VIX is near 30. The implied volatility on the NASDAQ, which is the underlying we will be trading, it's very high. This is not a high probability trade to be buying so much front-loaded volatility there. You're paying the premium for those contracts. And you have to see a move that is so far above and beyond what is expected to actually see the gains. So what I always recommend people do, pretty much across the board, is to be trading option spreads rather than individual legs. You want to have something that has both a long and a short if possible. Now, that's not always the case, but you want to kind of structure things so that you're taking that volatility part of the equation out of it. You want the least number of variables possible. So the trade that I think makes a lot of sense here is just a calendar spread. Now, typically calendar spreads, a lot of people sort of misunderstand what's going on, whether they're long vega, whether they're actually short vega. It really does depend on the duration. If you have that long option, because basically I'll structure one here. Let's say 5% out of the money. So the Qs are at 318 right now, 318.56. We're just going to place our trade for a 5% move to the downside, somewhere around 302, 303. All right. It's not, you can choose the number that you think, but I think a crash over the next 2.5 days of roughly 5%, that's kind of in the range of what we would expect. So if you go down here and you get let's just say this 302, and we're going to buy a calendar. What you will notice is that there is a short and a long, and you're using 2 different dated contracts as well. So it's not so cut and dry to know exactly what the volatility exposure is because you're using different contracts in different expiration cycles. So typically the thing we say is long put calendars are basically a long volatility trade. It's a long vega trade, but it cannot behave that way. If you hold it close to expiration, if the contracts are very close together, it changes it. Basically, a 3-day trade, none of that matters. But if you're trading calendars on a longer term basis, the longer the gap between the months that you're trading or the expirations, the more long vega you can probably expect it to behave. But it's not short vega. So this is not, you don't want to take something that is actually, if the market crashes, volatility elevates and it hurts your position a lot. That's not going to happen here. So this is essentially the trade that I would be looking at. 302, 303, you can choose, but this is the price right here. And if we expect a 5% drop over the next 2 days, that's going to hit this range. If we get something major, it might push to the outside here. If we get something a little minor, it might be down here. But you just basically need a move downward for this trade to be successful. And like I said, if we do get a market decline, volatility is going to elevate a little bit. And what you'll notice happens with this calendar, this pink line is the daily profit curve. Watch what happens if we adjust volatility and we basically make it, say it increases another 10%. You can see that that pink line actually rose upward. That's probably going to help this trade over the next day or two. So pretty good volatility skew as well. Like I said, you really just don't want it to hurt you. So this is the first trade that people can consider taking if you are bearish at the end of the day. Now, bullish people, this is a little bit different. Again, I'm going to use 5% out of the money, and I'm going to use a short-dated contract here. But for the bullish trade, you actually want a short Vega trade. You want something that will get a nice bump if volatility declines. Because, of course, if the Qs end up going upwards, you can see the implied volatility down here, this turquoise line, it will dip down if the Qs have a nice 2 or 3 day recovery here. So what you're actually looking for is a different trade than the calendar. We are going to do an iron butterfly. So again, whereas the price has changed a little bit, doesn't really matter. But we're going to go 5% out of the money, somewhere around 335, and we're just going to set up an iron butterfly. Now what that looks like, I'm sure some of you have probably heard of an iron condor. This is essentially the same thing. It's just the middle strike is the same price. All right, an iron condor would have the wings being a little bit wider. It would have 2 short strikes, both of them out of the money, one put, one call. This is an iron butterfly that looks like this. Now that's way too small a sliver there, so we're going to expand this. Let's say 325 to 345. And again, we're trying to get something that has a decent probability of landing in the range where we can make a significant amount of capital. I'm not trying to make 5 or 10% on this trade. Essentially, it's already going to be 50% or less because I have to guess the direction right. And then I also have to get it in the range. So this is not a high probability trade. I want to get paid if I'm right. And this is exactly what's going to happen. You can see the capital outlay is $165 for this trade. Let me lock these so the prices aren't bouncing around. But you're putting up $165. You can basically make several hundred more than that. And again, if you do a volatility adjustment, this is going to move in the correct direction for us. So if volatility goes down, say down 10%, minus 10, come on, what's going on? Come on, how come I can't get that right? There it is. You can see the pink line shot up pretty far. And of course, that's what we are expecting to happen as well. So you want that Vega to be not hurting you, but also riding that wave whenever possible. So if you're going high side, you want to know that volatility is going to decline over here. It's going to spike over here. You want that working in your favor. Long puts and long calls, you're fighting that headwind constantly. So not a good thing. So that's the trade on this side. Now, as far as scaling these to the right size of the contract, what I typically do for these types of trades, I don't like the idea, and pretty much all my options trading is like this, where instead of dividing your portfolio up into percentages, let's say you devote 5% of your portfolio to this type of trade. It's really hard to scale those on 5%. What really does that mean, right? Because options trading, you don't want to put all 5% into every trade. So the way that I typically look at my options trading is I will do percentages of my total net liquidation value per trade, depending. So for iron condors, it might be 3 or 4% per iron condor. That's fine because I'm using 50% stop losses and I'm not going to lose that much money, and they're way more consistent. With something like this, you know, as I call them, the lotto ticket, we're going to go maximum 1%, but probably 0.5%. So in this case, just so people, if you are in the, in the comments and you really want to participate in this, let's make it a 0.5 so it's not really going to hurt anybody too badly. And we are going to do a 0.5% net liquidation. So this is our live stream account. It's the one you guys have been seeing for a year now. Basically, we're looking for $2,520 is what, oh, no, sorry, divide by 2. We're going to do 0.5. So $1,260 is what I'm going to spend on this contract. So all I have to do is just adjust it. And basically, I'm just dividing by the 165 because this is a debit spread. You're basically paying the premium. That's how much the contract costs. Your maximum loss is the premium that you pay. So I can do 7.6 contracts. Obviously, you always want to round down. You don't want to breach over it. If I do 8, I'm risking too much. So you always round down. And I can do 7 in this case to match this size of the portfolio and this trade. You could even widen the wings a little further, but I think a 5% up move over the next 2.5 days is actually quite realistic expectation. So that's on the high side. The low side trade, kind of the same thing. You want to adjust this until your maximum loss is about $1,260. So again, you can just do, oh, sorry, I make that mistake often, 12.50, we'll say, divided by the 57 cents that the premium is paying, we can do 21 contracts of this one. And you can see over here, hopefully you can see that. Let me just double check. I do this so often, it's quite ridiculous, to be honest, how many times people are just staring at my dumb face while I think you're staring at my screen and you're just staring at me. Hopefully you can see this. But yes, this is scaled. You can see over here, the maximum loss on a calendar is going to be capped as well. And it's the right size for this trade. So here's the price right here. If it goes down 5%, you can see, I mean, this is several thousand. This is up to $7,000, $8,000 profit, risking $12.50. Again, not a high probability trade. This is less than 50-50, obviously. Directionally, it's 50-50, but range-wise, it's even lower. But you get a really nice payoff. That's why this is a lotto ticket. High side, risking about $1,200. And again, here, if you nail it perfectly, you could make $5,600. But anywhere in this range is going to be several thousand for this trade. So I'm much more than looking to double my money on this type of trade. So that's the kind of setups that I would be looking for. Now, before I execute this, I'm actually going to execute one of these, and then I'm going to get into the questions, because I'm sure people are asking, hey, how come you're not doing a vertical, or how come you're not doing a, whatever. The one thing that I'm anticipating, I haven't looked at the comments, but a lot of you are going to ask me the most obvious question, why aren't you doing a long straddle, right? That does make some sense in this case. If you don't really know if it's going to go up or down, why aren't you just doing a long straddle? So I'll show you what that looks like and why I personally would not do this trade. But if you set up a long straddle, of course it looks like this. You can profit if it goes strongly in either direction, and you only lose your money if it doesn't do anything. That seems like it fits the situation, right? We don't really know what the Fed announcement is going to be. If you do a trade like this, you can play both sides of the market. It seems like the right thing to do. So if I scale this trade, again, you're paying the premium, so you're going to talk, it's probably going to be only 2 contracts, but $12.50 divided by 1026, and it's going to be, 1 contract. So not great. This isn't a perfect proxy. I would have liked to see it more, but let me lock that. The reason this is not a good trade is because, of course, look at the structure. You're basically buying a long call and you're buying a long put. Volatility is very expensive right now. So you are paying way too much money for both sides of that contract. So if you were to imagine, remember this trade here, the downside trade, if it goes to 302, this person could potentially make as much as $8,400. Now, again, this is not a perfect proxy. This is a little bit light. This is only risking 974, 1,000. But if it goes to the same 302, this person's only going to make $860. And if it goes on the high side to that 335, where the person who's buying the long butterfly, the iron butterfly, that person's going to make $5,000 or more, whereas the person buying the long straddle, I mean, this is not a really attractive trade setup right now. And it's because, of course, I mean, the VIX isn't a perfect volatility proxy, but the VIX is high. It's at 30 basically right now. You're just paying too much for these contracts. So it sounds like it's the right setup, right? Straddle. Anytime you think, well, I don't know if it's going to go up or down, straddle, long straddle. Everybody thinks that. Or playing directionally, long puts, long calls. This is really the worst way to structure the trades. You want something that has short exposure because volatility is high. You might as well sell that volatility, but you don't want to do it in a way that is going to really cost you a lot, like an undefined risk option on the short side. You want defined risk. So you're looking for your calendars, butterflies, iron condors, things like that. Those are always way more appropriate to be taking for these types of trades. You're going to get way, way more, much wider wings, much better risk reward profile. So that's why I would never consider doing a long straddle, even though textbook wise, a lot of people would probably say that. Vertical spreads is an option as well, but I just personally like calendars, butterfly. Like on the downside, long put calendars are kind of a default. On the high side, iron condors, iron butterflies, pretty solid way to trade it. So I know in the poll, I don't know how many of you have answered that. Let me see if it says it on YouTube. So 77 people have voted. And 70% of you think that we are going to rally, 30% thinking crash. That's that's a perfect poll, actually. 79 people voted. So I actually agree. I wrote it up on a blog yesterday, and I just think on balance of probability, I think more people are looking for a rally. Like I mentioned in my blog yesterday, I did share it publicly. I very rarely do that because it had all the trade signals as well. But if you go on Twitter, you can actually see that, and you can access one of our daily blogs. But I mentioned in there that the fact of the matter is the vast majority of the investment world does want the market to go up. There's, institutional traders, fund managers all over the world, financial advisors. It's a blanket statement. It's not completely accurate, but in large part, these are fairly basic sort of pie chart buy and hold type strategies. Of course, there are people doing very sophisticated things, but that tends to be the outlier. Most people in the asset management world, it's some form of 60-40 buy and hold, give or take, with correlations and whatnot. So the vast majority of the investment world wants the market to go up. It's been down for a while. I think people are looking for any reason at all to rally here. So I tend to agree. Let's go ahead and open this trade. So unimportant, I think whatever trading software you're using right now, it's probably the same, and you probably know exactly how to use it. But this is the butterfly that I'm going to set up. Let's see the price. So somewhere around 170. I'm fine with that. It's roughly 5% out of the money, and we're looking for 7 contracts. So all I'm going to do, this is Thinkorswim. Again, functionality, it's probably the same as what you're looking at, but I would just go ahead and go in to the 335, of course, call side on the left, and just go to butterfly, 7 contracts. And it's a spread, so, getting the right fill, sometimes you have to do it. I'll explain that really quickly here. I'm just setting up the strikes. Remember, we're doing a 325, 35, 45, about $1.68. Now, you can see in Thinkorswim, and again, yours will be the same. I use IB for my long-term portfolio. This is the live stream money, but it's bouncing around, so this will probably take a few tries. But you can see a mid price and a natural. If I say 172 right now, I'm going to get that immediately. If I try for 168 around the mid, it's a better price because I'm paying a debit. I want that to be as low as possible, but it's a spread with several other legs, so you might not get the mid price. But I always put it on the mid, and then I'll basically go down a bit. So maybe I'll try 165. Just double check. I'm risking about $1,200. Good to go. And then it's going to go into your monitor tab right here. So you can see I'm trying to get 165. It's trading around 167. So what I will do, these are computers. Things happen very quickly. You don't have to sit in front of your computer all day long trying to get the best fills. You just get the price that you get in the moment, right? Don't try to nickel and dime things. I could sit here and wait a couple hours, or actually I can't today because it's a Fed meeting, but I could wait a while and see if I get 165. What's the point? Long term, it's all going to work out the same. Sometimes you'll get a really good fill. Sometimes you'll pay a little bit more. Long term, it's going to average out. There are times if you sit here long enough and you wait for the right price, it starts running the other way, and then you have to chase it really high. So I don't really care. Basically, what I do is I just cancel. I'll go up one. I'll give it, 15, 20 seconds. And then you basically just keep doing that. And you will get it, right? So 167, 168, just because it's a live stream, I'll speed this up a bit. But I would probably wait 20 seconds between each one of these price adjustments, and then it'll fill. Whatever, you can see the price is running on me, right? This happens. You shouldn't nickel and dime. You should just kind of get your trade done. Doesn't mean you overpay. You never want to overpay. So mid 170, let's try to get this done at 171. Hopefully we hear that bell. There it is. Oh, the computer behind me rang as well. That was weird. Kind of scared me a little bit because I never heard that double bells before. So that's it. The trade is done. So you can, that's the UVXY trade. There it is right there. So I've got 7 contracts of this thing open, and now we can blank all of this out, and this is my live trade. Now what I will typically do, just clean it up a little bit so when I log in every morning, I can see it, expand it so it makes me feel like I have a much higher probability of success here. And here's my trade. So I'll add another slice on the price today, and there we go. Now for a trade like this, because it's a 2.5-day trade, I'm probably not going to be closing it very early. I'm just going to wait till Friday and see if I can land something in the range. Now, the one thing that you want to be aware of before I wrap this up, you want to make sure that you understand that when you're trading spreads like that, calendars, butterflies, as you approach expiration, you don't want any of those prices to expire in the money. So you have to know ahead of time that regardless of what happens, if the market goes up, even if it's out of the range but getting close, I'm still going to have to manually close that trade. You don't want to wait until the bell. Things can happen later on. You can actually get assigned one of the legs. You don't want to do that. So with butterflies, we do this with the UVXY strategy all the time within our portfolio. Unless it's just miles out of the money, I'm just in the habit of closing them out. Trade fees are very low these days anyway. Hopefully you're trading with a broker that has reasonable fees. And just know that you're going to have to close this out on Friday. Unless it goes the other way, if I'm completely wrong and the market crashes, then these are going to be so far out of the money, it's not going to matter. And save the $5 or whatever it is and just leave it. But just be aware of that whenever you're trading options, that's why I said I clean it up and make sure, because I'll put this in a spreadsheet later. And I will actually be, I'll just go through the spreadsheet and I will see if I mark mine on yellow. So if I see yellow for the iron condor strategy, I'll know there's an iron condor. I'll just quickly check. Let's say I don't have it on, but I'm watching one. I'd go here, I'd check. I would have my stop losses already pre-labeled. And I would just say, oh, no, we're good. The price is here. Go on to the vol trend strategy, check the UVXY, see where the prices are. My trade is here. It's way out of the money. But if it is, I'll just go down the list. So you want to make sure you clean it up to the point where you can see it at a glance, because you might have 10 trades on at once. And for this trade here, that's what mine looks like. So I can see very easily how I'm doing. Hopefully we get a nice big gap up, and this trade is an easy win. The last time I did one of these, it was maybe 2 months ago or something. We did the VXX trade, and it didn't go so well because Barclays still has not fixed that stupid ETF. ETN. So that trade was, I gave it 5 weeks and thinking, they're going to fix that within 5 weeks. They did it TVIX in 2012. They fixed that in 4 weeks. I'm sure they can fix it in a couple weeks. Well, they have not. So that trade was a loser. Hopefully we can get a better one here. But whatever side of the market you're on, that's fine, because right now it's a coin flip. We have no idea. I'm not pretending like I know what's going to happen at all. This is called the lotto ticket strategy for a reason. So the market right now is up slightly. I think everybody's just waiting. It's 133 right now. So 27 minutes from now, we're going to know. Now, we won't know the direction of the market. That's one thing that whenever you see one of these binary event resolutions, you see the announcement, you can expect some directional whipsaw. It might go up and people think, oh, it's running for sure. And they'll get in and they'll chase it and they'll put on trades. And then 10 minutes later, it reverses and goes the other way. So during about the hour after an announcement, I don't make any trades no matter what. Even if something looks like, wow, it's pretty strong directional, it can totally reverse by the end of the day. So I like to get it on beforehand and then just cross the fingers. But I don't do these type of trades very often. Most of the stuff I do is very high probability, targeting long-term growth. All right. As I promised, I'll keep this super short because honestly, I don't really care. But like I said, I have to answer questions in bulk sometimes because I'll get carpal tunnel syndrome typing all the emails that people ask me. So I am on Twitter. If you want to follow me, it's @VolatilityVix. The ticker's right there. Follow me on Twitter. I post sometimes. I like the platform. Don't love it. I much prefer YouTube for obvious reasons. It's a search engine. It's legacy content. People can come back and see your videos years after you make them. It's definitely my favorite social media, but Twitter's kind of fun and entertaining. So what do I think about good old Elon Musk buying Twitter? It's not a done deal, but it does appear like it's going in that direction. So I don't even know if this is my place to say, but again, people ask me, so I kind of have to respond. If you want to tune out here, you're like, I don't care about this person's political opinions. That's completely fine. You're not going to hurt my feelings. But I think the one thing that people are focusing on above everything else, of course, there's people on the left who are talking about how, here we go again, another billionaire buying exercising too much power and buying. I don't I don't put too much stock in thinking like that. I think a lot of the services and the great things that we have in this world, they are brought to us by some of the most successful, wealthiest people in the world. I'm not anti-wealth. I mean, Elon, he didn't steal the money. He created products that people willingly gave him the money. So, good for him. I don't really focus on that. But it's really the free speech issue. I think that people or some people, I think, are kind of missing a little bit. A lot of people are focused on the fact that Elon has made it fairly clear that he's going to try to go into Twitter and basically open up the free speech and make sure that both sides are equally represented. And he's mentioned, I don't know if he's used the words, but he's certainly strongly implied that he is a free speech absolutist, if you would call him that. My take on the whole thing is, on the one hand, I will grant that I think the people who are currently managing Twitter, the whole team, the decisions they're making, it is pretty clear to me, I don't have any data to support this, but it's pretty clear to me that more people are getting banned and kicked off the platform on the right than on the left. So I think, for me personally, again, I don't have data to back this up, but I think that it's pretty clear to me that it is uneven. And I can even go as far as to say that Twitter is not being managed very well right now in its current form. But I think a lot of people are going to be pretty disappointed if you think that Elon is going to be able to go in there and just fix everything and be this bastion of free speech. Because what's going to end up happening, there's two problems with the free speech thing. The first problem is, this is actually a dangerous world. I mean, there are actually people out there that are looking to do nefarious things, and it's not such a great idea to give a megaphone speaking to hundreds of millions of people around the world with some of these ideas. There are social media platforms that people can go to if that's what they're looking for. Go to 4chan. You can go hang out over at 4chan, and you can see how much you appreciate the basically unfettered free speech that goes on there. You've got things going on there that is just it's turnoff for a lot of people. You've got things that, I don't even know if I can say the words on YouTube without getting banned, but, trying to get around the YouTube algorithm. Let's say lewd, got to be careful here, lewd photos, videos of people not of the voting age, if you get my drift. People looking to distribute illicit substances. I mean, take your pick. There's things that are just going on over there, and people can go there if they want. But the problem is that at some point, even Elon Musk is going to have to acknowledge that there are certain areas of the free speech thing that you just can't get around. There are terrorist groups out there that would want to use platforms with 400 million users to organize things. There are people who would want to organize and influence impressionable young minds, call them a cult leader or something. But there are people doing things. So I think most people would agree that some form of censorship is going to be necessary. I think Elon Musk at some point is going to realize that that's the case. So that's the first problem. The second problem is the whole platform itself doesn't work unless there's money involved. And that's where you have an even bigger problem, where advertisers, companies, may not want to stamp their name on something like 4chan. They may not want to associate their brand with something that is just a dumpster fire of people saying and doing whatever they want, right? I'm not an advocate for, censorship. I'm very pro free speech. But all I'm saying is it's kind of a slippery slope. And once you acknowledge that some baseline level of censorship, even a base like super entry level, is required, then at that point you're just substituting one person's ideas of censorship for another's ideas. And I think that Twitter's doing a poor job. So I'm not opposed to somebody else coming in and trying their version. But what I'm pointing out is, if people think that he's going to come in and just allow everything to go, the whole platform shuts down if the money stream is gone. There are no companies, there's no Nike and Apple looking to brand themselves on 4chan. It just doesn't happen, right? So at some point, you're going to have to make some decisions on that. It's a very complicated problem, and it's probably time that people start accepting it may not be possible to solve the free speech issue. There might just be situations where a little bit of inequality is just part of the game. It just comes with the territory because you have to censor some things, right? Obviously keep it to a minimum, but once you open the door to some, then it's just variations of some, right? So Elon, I'm on Twitter. I like it. I want the platform to continue. Hopefully he can do some good things. Hopefully he can clean up the silly bots and, people copying your profile. And there's got to be simple algorithmic ways to solve some of these things. And hopefully he's got some good ideas. But as far as the free speech goes, I don't know. I think that he's going to try his best, and I really hope that he does better than the current team because I think it's quite clear to me, objectively speaking, they're banning more people on that side than that side, and obviously that's not fair. It's not Twitter's fault that they became so popular, right? When you start a business, you should be allowed to do whatever you want with your own business. But Twitter has reached a certain level where you could make a strong case that it is now a public utility at this point. So, we'll see. Elon is going to have to keep the money rolling in at least partially. So he's going to have to limit certain things or the whole platform will be gone, right? Go over to that previous place that I was talking about. You'll spend 5 minutes there and you'll leave. Like nobody wants to be over there. It's just not interesting. Everybody wants to be where the action is, and that's Twitter. So that's all I really think about that. I think people are probably getting a little bit too excited about just how much change he can actually make. I hope he does good things, but it's just, you can't give that giant megaphone to everybody with an idea. There's a lot of people who want to do dangerous things. It's a tough problem to crack. This social media thing is not easy. To pretend that, it's just so simple. You just let them do what they want. Okay. Advertisers will leave, the platform will be gone, and it'll turn into 50 million users and then 20 million users, and then Twitter will be gone. So maybe not gone, but certainly off, and somebody will start something new. It's just the way it is. Plus, another thing I will mention really quick, I'm not exactly sure whether this is even about Twitter. I mean, it's certainly possible that he's using this as some sort of way to game the ability to sell Tesla shares, or he kind of interlaced it all with some of his other information. So I'm thinking, I don't know. Obviously, if he comes and dumps 30 billion shares of Tesla, $30 billion worth of Tesla shares, that's going to look really bad. But if you say, hey, I'm buying Twitter, I have to do all these things, and these actions are going to pay for that, I don't know. Maybe. I have no idea. But I hope everybody who was banned, bring them all back. I think it's the vast majority of people who are banned. It does seem to be pretty silly reasons, and it does seem to be more against the right than the left, which is obviously unfair. But we'll see. We'll see if Elon can solve this very, very difficult problem. I can't see a solution. I think absolutism is not going to do it. I think that that leads to a platform that dies quickly. So. That's my thoughts on the whole situation. I kind of like Elon, but on the other hand, I kind of think he's, the guy makes a million promises, and he's just, hey, let's build some magnetic train going from here to here underground. It's going to be super cool. I'm thinking, well, why don't you just, slow down a little bit, build the cars, make those work first, and then sort of move the goalpost or move the chain slowly. He seems to be on step 15 all the time, and he's really not taking care of the first few things. So, I wish he would he's already starting to do that. He's every day I see him tweeting stuff. Here's what we're going to do. And come on, slow down, do 2 or 3 good things, and it'll be an improvement. Because Twitter right now, there's some problems there. Definitely some overreaching censorship going on. That's got to stop on all the social media platforms. But boy, I don't want to be the one making those decisions, because there are a few voices in this world that you kind of don't want. Anyway, that's my take. Think what you want, obviously. That's where I'm at with the whole thing. So let's get into the Q&A. What time is it? 44. I'll keep an eye on it, and we'll kind of watch the Fed meeting come in. Hopefully everybody's had a few minutes to put a trade on if you're going to. I typically will do it about 2 hours before. You don't have to go right to the end, but on trades like this, you probably do want to keep them quite close to the announcement so that your trade represents something as close as possible to the price right before the binary event. Right? I did the blog yesterday, but I said in the blog, I'm not going to take the trade yesterday. I'm going to take the trade today. So, all right, here we go. Try to get through a few of these. Is long gold the wrong move now despite VIX backwardation, considering the deflationary pressures? So in our tactical balance strategy, we are in gold right now. Do I have that open? Let me just open a page really quick. So the thing you have to understand about that position is I'm not bullish gold just because I'm holding gold. That sounds a little bit strange to say. Like, why would this person buy gold if he's saying he's also not bullish on gold? That position doesn't really have much to do with gold specifically. That gold position is a safety position when we are deeming it too risky to hold equities. So this is the strategy. We've got 2 times Dow Jones for people with lower risk tolerance. They can just do the 1 times DIA. But I like to do the double leveraged equity ETFs during the more stable times. And of course, we get out. This used to be bonds, and then we've got gold, and we are in gold. This doesn't mean that I think gold is necessarily set up to rally. It just means that I don't want to be double leveraged equities right now, and you do need safety positions. So in the, oh, my screen froze there. So in the defensive rotation, we've got utilities and cash as our safety positions. When I buy utilities, it's not necessarily saying, wow, utilities are super primed right now to go up. It just means that I don't want to be double leveraged the NASDAQ, and we need some safety positions. We need to rotate downwards progressively as the risk is elevated. And then strategic tail risk strategy, kind of the same thing. We've got real estate over here, and then we've got long volatility here. So this is not an active, I'm super bullish gold. I'm not against gold right now. Obviously, we're in an inflationary we got high inflation. If gold can't do something decent in this environment, I don't know when it will. But don't confuse that with me saying, you know, this is just all out gold is awesome right now. I'm fine with that position. It's 15% of my portfolio. But again, it's look at more of a safety position rather than an individual analysis of gold itself. Could you please check yesterday's VIX 9D values? The percentile rank is posted 3%. Yeah, for some reason, my spreadsheet, the VIX 9D misfired. It was $10 lower than I posted. I think it was 23. It was 33. So just to give people an idea what this guy's talking about. Right here, for some reason yesterday, my VIX 9D level was all the way down here. So it kind of skewed the what we call the fast crossover, the VIX 9D to the VIX. This number was wrong yesterday. Everything else was right, but for some reason my spreadsheet did not update, and it misfired there. So that was a mistake. Okay, let's go with the QQQs. You went with the butterfly, it looks like, so we are on the same page, looking for a little rally. Crash is probably not until October. Could be right. I am expecting late year fireworks because by that time, if the Fed can be believed, we would have raised rates 3 to 4 times and not small raises each time. So, yeah. How do you motivate yourself when there are many things to do? I think I probably tell myself 10 times per day to just keep moving the chains. If you don't follow football, essentially, every down, you just want to keep moving down the field. I have more work to do in every single day than I have hours in the day. So for me, I have to prioritize the things that are most important and they're going to make the most impact on what I'm doing. And then I just have to make sure that I'm always moving the chains. So there are times I am a very motivated person. I'm disciplined. Motivation is not a good thing to have, by the way. Forget motivation. Motivation is, ignore that. Discipline, right? Motivation, I mean, that's easy. You're motivated when you like something and you're unmotivated when you don't. Discipline is what you do even if you don't like it or if you're not in the mood. Like I went running 20 kilometers today. I probably didn't want to do a live stream, but hey, I have people who were interested in this trade, so it's 1 in the morning for me. It's almost 2 in the morning. I worked for 10 hours. I ran 20 kilometers. I'm tired. I want to go to bed. But you just have to keep moving down the field. That's what I would say to you, is that make a list of 4 or 5 of the most important things, and every opportunity you get, just make small improvements on that. So that's what I would say. It's not about motivation. Do you have to do it? Then just do it, right? The work that I do, it will never be done. There's always more to do than I have hours to do it. So got to be disciplined, got to keep working. Okay. What performance would your portfolio have if you had increased your 1% per position to, let's say, 1.5 or 2? Does it increase the overall performance in drawdowns? I assume you mean the vol trend strategy. Right now, we are currently, for the leveraged portfolio, we allocate 1% of net liquidation value to these UVXY. It's a short vol strategy. If I were to go 1.5 or 2, the strategy itself is profitable long term, but you have to remember the reason that this strategy works so well within my portfolio, and everybody's going to be different. I opened this trade when the price was all the way down here, so kind of ignore that. But this strategy works because the only way that this can lose money, it is short vol. Here's the UVXY all the way over here. It should be here on a normal week, but we want it to move down and decay at the normal rate that these volatility ETPs decay. So it is a short vol strategy. I just don't like high side risk because the rest of my portfolio sometimes has net long equities. It has other things that are negatively correlated. I don't want everything I do to be in trouble if volatility spikes. So I do short vol strategies that have no upside risk. The risk is that if it decays so far that it actually breaches the entire thing and runs all the way over here. But if that's the case, I've got 3 strategies that are going to be double leveraged net long equities, and these 3 strategies are going to make way more than this one loses. So I'm not at all concerned if this UVXY goes from here all the way down to here. I'm almost daring the market to do that, to be honest. If I increase these position sizing, there is a level where the losses over here could start to drag down too much the gains happening over here. And so I've deemed 1% and 2 possible trades to be sort of the appropriate number. If you did 1.5 or 2, you'd probably want to start setting your trades a little bit further on the left. You'd want to start skewing them so the UVXY has to go crazy low in order to cost you that 1.5 or 2%. This way, for me, for my portfolio beta, remember, every single day I know exactly how exposed I am to the market. I know all the strategies and how they are reacting to the S&P 500. And so 1 or 2 butterflies at 1% is the ideal amount for my portfolio. If we went higher, profit would increase, but correlations would be different. I'd lose more if it goes up. I'd make more if it goes down. The performance would probably look similar, but it would be coming in a different way. I'm using the vol trend strategy as a balancing, sort of a diversification of the rest of the stuff I do. Market's going to crash. Okay. I can't guess on crash or rally, but whatever happens, that will be totally reversed in a couple of days. Yeah, that's very possible. I think any rallies might actually be short-lived. People might seriously second-guess that. That's a double post. With incoming moves, focus on a couple-day trade is mostly the only move. Yeah, well, these days, I mean, I'm getting chopped up in the last couple of months by that because, I mean, I have a full options portfolio that actually is doing extremely well the last 6 months, but my tactical strategies are trend following. So if you want trend following, you need the trend to last more than a week or two. And what I'm getting chopped up on is every time you see a move, you get into that move and then it reverses course and you bleed a little bit on each one of those direction changes. So, I mean, it is what it is. It's the environment that we are in. Why didn't you also consider a calendar spread to the upside? Essentially, it's just because, like I said, the calendar on this short date is not, it's going to be fairly neutral Vega, but the iron butterfly is going to be short Vega. So if we get a jump today, like let's say at the end of the day, the market rallies 1.5%, you're going to see that butterfly be strongly in the profit range quite quickly. Whereas the calendar, you'll have to wait for the expiration because volatility will move against you, or at least not help you in that case. It's a 3 and a 6-day expiration cycle, so Vega's not really an issue. But like I said, on this side of the trade, you know volatility is going to decline if it rallies. On that side of the trade, you know it's going to increase if the market crashes. And you want to set up your option trades to, at the very least, not be swimming against the current. Calendar's more appropriate on the long put side. Out of the money put calendars. I very rarely use out of the money. I'll say never. Long call calendars, out of the money on that side, it's just, there's better structures than that. In case we do both, we're risking 250. Yeah, you could do both. So I should go through that as well. How much? We got 5 minutes until this goes. You could do both, and it would actually be better than the long straddle that I pointed out. That's kind of a throwaway, total waste of a trade, right? Remember this trade, this is just paying too much for both of those individual contracts. Like I said, you not making a whole lot over here if you get it perfect, or over here. But you could actually do both. Now, obviously, what's going to happen, you need a move, so you need it to go at least 3% up or down to get into the profit range, but you're going to lose one of them for sure. So you're going to lose that 1250. But this is way better than the long straddle. Long straddle profits on both sides of it, but it's inefficient on both of those contracts. This trade profits on both sides of it with a big move up and a big move down, or not big, but 5% in 2.5 days. But it's far more efficient, and you can just get way more bang for your buck. You can see here, I can still, at 302 on the downside, I could still potentially make over 7,000. And on the high side, you can make over 4,000. That is just so much better than this trade. This is just kind of a throwaway. The only times I use long straddles are when you are anticipating volatility going up. So little teaser for my VTS options community, earnings trades, right? The only time that you can basically be assured that volatility is at least going to maintain itself is if there's an unknown event on the horizon, so earnings event. Or you could have done the long straddle last week and closed it right now, 3 minutes before the announcement. That would have been a good trade because the long straddle is going to benefit from a building of volatility. The last thing you want to do is keep that trade on after the announcement because we're going to get a volatility crush more than likely. So long straddles are actually good in the buildup, but you don't want to hold it through. You do want to have some short vol exposure if you're going to hold your position through a binary announcement. So yeah, you could do both. That's certainly on the table. I wouldn't because, hey, lotto ticket. I only do, 12 to 18 of them per year. I just look for the absolute best setups, and I'm not churning through these very often. So I'm just going to roll the dice with up, and I'm going to know in a couple minutes. Although I won't, we're going to have to wait for it. But on spreads, broken wing butterflies, do you go for credit or debit? This depends on the exposure of my portfolio. So for me personally, I would be looking for, how exposed am I? If I'm 2 times leveraged long equities on all 3 of these strategies, then at that point, I can get extremely aggressive on the vol trend and I can bring in a credit for those. But if I'm not yet allocated, like right now, for example, on this UVXY trade, I'm not yet allocated to net long equities in my portfolio. So I wouldn't be looking to get aggressive here because it could easily rip lower. The only times that I would get a credit for these trades is if it's sort of midway through a longer term trend. At that point, the likelihood that UVXY goes down 20% in a week is far limited compared to right now. It could easily, if we get a rally in the next 2 days, this thing could easily go pretty violently down. But if you're sort of mid-range in a trend, that's just probably not going to happen. So progressively more aggressive as time goes by is what I do. Doing both makes sense. Like I said, it works, it's efficient, and plenty of profit available if you do both of them. I like to roll those dice on these lotto tickets. I'm looking to make that 4 or 5 grand, putting up 1,200. Makes sense, but it occurred to me. So you're anti-free speech. Not even remotely close. No, I'm. I think I made it quite clear that I'm as far on the pro-free speech range as a person could possibly be, while still acknowledging that we are adults living in a dangerous world, and you don't really want to give a megaphone to 400 million users just for anybody to do anything, all kinds of illicit things. It's kind of, personally, I think that's a little bit naive to think that the platform would work in that capacity. I think it would very quickly delve into something that looks more like 4chan than Twitter. And I like Twitter. I want it to stay Twitter. I want it to be better. I want to have more free speech. I want less people to be banned. I want more people to be able to be themselves and say what they want. And if people disagree, the best thing, I mean, I'm a believer that the best response to things that you disagree with are more speech. You know, give me a counter argument. That's much better than just stopping someone from speaking, right? Obviously, the best solution to bad speech is more speech, not less. I mean, banning people unless they do something terrible. Like if you dox somebody, if you are rallying the troops on Twitter to actually go to someone's home and harass them, yeah, you are very quickly delving into illegal actions there. So, sure. But anything short of that, no, I'm absolutely pro-free speech. I don't know where you got that idea. Maybe you said that like 1 minute into my rant or something, so apologies. There is something to be said about variety. If you want, if you want totally free speech, go to 4chan. That's what I said. Yeah, that's your right. Having brand safe places to go is appealing to some, and that's their right too. Yeah, I think most people, like you're going to get about 98% of the population who kind of agree with this, that we already have places that are seemingly just the wild, wild west. You can just do whatever the hell you want. And they're pretty awful places to go, to be honest. I've not been, but I've read articles on what goes on over there. I don't want to spend any of my day interacting with people who think that's cool. But we got to do a little bit better than Twitter's doing. Got to do a little bit better than YouTube. You get people losing their channel. I mean, in some cases, for just saying things that are maybe I flat out disagree with them, but you know, you got to let people be people and have their own opinions, and you know, that's the thing. It's a fine line. It's a balancing act. I don't think people who have never started a business or ran a business really understand that there's always going to be that aspect of, even if you're not just hey, I'm doing it all for the money, you need the money to keep Twitter going. So on some level, I want Elon to care about the advertisers and the advertisers' opinion. That's the only way you're going to have Twitter grow and expand and have it to be the cool place we have. We need it to work and make money. So advertisers just don't want to put their name on certain things. That's why YouTube, I'm on YouTube. I would never say or do anything. My type of content doesn't cross any lines, but you know, the lines are pretty clear. I mean, there's certain things that it's quite obvious you're going to get banned for. And if people choose to do that, that's fine. There are other video platforms that let you put whatever you want on there. If you want to access the second largest search engine in the world with a massive number of advertisers on there, you're going to have to do things that don't make them, you know, want to disown you and your content. Oh, let's check the time here. 2:03. Did the market do a little, the one way you can always tell if the announcement has disseminated on Twitter or not is you'll go to a minute chart and you'll see it. So this will be kind of interesting here. And like I said, you're going to see some whipsaw. So right now there's probably people thinking that this is a fantastic announcement. The market's already up 0.6. It's running like crazy. Here we go. But very often, it takes a few minutes for the market to really decide what it's going to do. So the last thing you want to do is start chasing things up or down when you see these little shake and bake moves after an announcement. Just chill out, grab a drink, don't take any trades for the next hour, and just see where everything settles. Let's check the trade and see if there's a volatility change already, which sometimes you see them quite quickly. Watch this. So this trade is up 200 bucks already. 232. If this rallies strong by the end of the day, like I said, you can be up in significant profit range quite quickly, or you can be way down quite quickly. But yeah, it happens. So here we go. Now, I would imagine sometimes I'll go to Twitter to get my news. Sometimes I go to Yahoo. Sometimes I go to Bloomberg. Sometimes I go to CNBC. I'll just zero hedge, whatever, whoever's saying stuff. So Fed raises rates 0.5. Nobody is surprised at all by this. The real key is going to be when he opens his mouth and actually talks about it. What is he going to say? Is he going to say something that scares the market? Or is he going to say something that gives people the impression that we can all take a breather and just relax for a couple weeks and actually get into some bullish trades? So the one thing I always like to check, I just kind of run through the old asset classes. So gold looks like it reacted that way. I would imagine, well, that's not actually terrible for TLT. Real estate recovering. Utilities should be up good today, and they are. And then sometimes there's differences in the equity indexes. So you've got the Qs there. Got the small. Yeah, they're not doing that well. All right. So no surprise. But again, it's really going to be the statements that that make or break things. So interesting. What do you think about the lockdown in Shanghai? Is it really because of COVID or some power demonstration from the government? I have no idea. I mean, you can't trust really any of the information that comes out of China. I remember when we were watching these, can I say that word? I should still say pandemic. When you're watching the numbers, of course, China was showing a lot of problems, right? A lot of people getting sick, a lot of people dying, and then it just flatlined. They just decided one day, we have no more cases. That's it. It's just a flat line. So you can't trust any of their data. But yeah, I mean, apparently that's the lead story that they're saying is that they are having serious troubles again. But I bet you if you looked at the government numbers, they haven't had a case in a year. So who knows what's going on over in China. Got a jet. Yep. Thank you. Thank you for checking it out. Hopefully you got a trade in. Hopefully you were bullish. Or actually, it's probably too early to make that call. But that's such a nice cat. Yeah, she moved over there. You know, I made a mistake. I made actually a really comfortable bed area over there. And because she'll usually sit here for 12 hours, just the whole day doing work with me. Now she kind of splits her time. So that sucks. I should take her bed away. No more comfortable bed for you. You're sitting on my desk. Do you have any other business except trading? I have several things that I do that fall under the umbrella of VTS. You know, I do consult for hedge funds and other asset managers, family offices and whatnot. So that's part of what I do. That business is called Prosperitas, if anybody's wondering. And then I have the VTS options. I like to make YouTube videos just to entertain people, even though I'm kind of boring and my videos kind of suck, but I like to do that. So I'm really busy. But and then, of course, I trade my own capital. That takes time as well. And I have to build strategies and manage strategies. Lately, performance not so great, so I have to figure out what's going on. Obviously, it's a pretty rough market for most people. If you've got the standard 60-40 stock bond and they're both just cratering, yeah, it's going to be 95% of the world is hurting pretty bad right now, performance-wise. So it's just one of those awful years. That doesn't happen often. Like I showed the chart originally in the open here. Obviously stocks are scraping the bottom of that range. They're down substantially, but bonds as well. So there's really very few places for investors to hide this year. It's just one of those years where, yeah, it would have been great if volatility picked up more and I got the signals earlier and there was, warning signs ahead of time. But volatility's been very muted. And stocks and bonds are cratering. So, that's no fun. So I have a lot to do in my days. Like I said, far more work than hours in the day. I just have to keep every single day, just make sure that at the end of today, I've done significant work so that I'm ahead of where I was yesterday. So today I did some really good work on my new website that I'm building. I wrote a script for a new video. I did this live stream, so, got a check mark on the old YouTube channel. Yeah, I did some things today. So I'm a little bit better today than I was yesterday. And that's what I do every single day of my life. I don't take any days off. I ran 20 kilometers, so I'm slightly healthier today than I was yesterday. Everything is all about just moving forward with discipline, because half the stuff I do, I don't want to do it. But that's why I say motivation is for, dreamers, and it's really just about discipline. You can't get around it. A lot of the things you do, no offense to anybody who sends me emails, but I don't want to answer emails anymore. I've been doing it for 10 years. I've answered the same question 1,000 times. I don't want to do it, but I just have to. I just get the coffee, I sit in front of the computer, and I answer the same questions that I've been answering for 10 years. I do it patiently. I do it calmly. I don't, say, hey, come on, I've answered that 17 times. I don't do that. I just need to do it. So yeah, I'm busy. Okay, what has been the performance of VTS strategy year to date? It depends. If you include the options, then pretty good. Well, not pretty good, probably down about 6%. But the trend following strategies are down like 15, which still, I mean, that's in the range of where you'd say, it's getting a little uncomfortable. But you have to factor in the fact that we're using double leveraged ETFs. So if you look at this, to be down that much, if you talk about the QLD, which we use, the QLD is down over 40% this year. We use the DDM, which is 2 times leveraged Dow. It's actually doing the best of the bunch. And then we also use the SSO, which is the 2 times SPY. So this thing's going to be down, 25, 26%. In aggregate, buy and hold is, for the 3 equity positions that we use on a day-to-day basis, you're talking about somewhere in the range of 25 to 30% down. So I'm certainly not cheerleading what how I've performed this year. Like I said, the volatility metrics have let me down this year. They did not signal at the normal ranges that they do. It's been a muted volatility response. And for a person like me who gets the vast majority of their signals from those volatility metrics, a little bit frustrating. But yeah, I think overall, if you factor in the fact that at some point in the future, the markets are going to hit an all-time high again, glass half empty, glass half full. Half empty, well, nobody likes a 15% drawdown. Half full, well, the QLD has 40% to the upside to just get back to the break even. The SSO has nearly 30% just to get back there. There's a lot of potential gains in there if we happen to catch a longer term trend. But I look at everything for me, again, this is not fair because I got so busy in the last year that I actually had to shut down the VTS options service. Very unfortunate because it's done really well. I mean, these strategies are all set up to basically profit from things that these trend following strategies don't profit from. That's the point of a diversified portfolio, is that when these 4 are really firing on all cylinders, my options trading kind of just treads water and doesn't do much. When these ones are struggling, that's when these ones are there to kind of pick up the slack. And so, yeah, I don't know if I even have a way to show this. But you can see the, I don't know, can you see that? This is the VTS options portfolio. And, this isn't the best period I've ever had. This is not a logarithmic chart. Some of these past periods are a little bit stronger, but this is one of the better periods that I've had for options trading. The last 6 months has just been killing it. So that offsets the rest of the portfolio. If you want to see some other things, this is the trend following stuff. And again, this is using double leveraged ETFs. So the 15% drawdown, it doesn't look great. But then if you factor in the options as well as a 60-40, it's just a little blip. I mean, I think it's down 5 or 6% or something. So it hasn't really been a bad year at all for the overall. But yeah, trend following has unfortunately been choppy. No fun. Isn't short-term capital gains tax in Canada very high? Ever thought about moving to Singapore or Switzerland? I have not been a Canadian resident for almost 20 years. So I agree with you wholeheartedly. Canadian taxes are far too high, and I do not pay them. But no, I would move. Both nice places. The problem, I'm a digital nomad, so I do a lot of travel and a lot of research on places to go that are tax savings and whatnot. So basically the number one place for me in my mind is clearly Dubai. That's not only is it just a great place to live, just lifestyle wise, it was phenomenal. I loved it. But it's also, of course, a tax-free country. You can buy into their residency program very easy and cheap. I mean, not cheap, but as far as buying into residency, 300,000 US dollars is not a lot of money when you're talking about buying residency. Switzerland's going to be over $1 million. Singapore is going to be very expensive. Places like that, places like Monaco, you can do the tax-free life, but buying into it, typically they'll want you to buy real estate worth over $1 million or deposit some massive amount of money in a bank for some low interest bond returns. Dubai's a good, solid place. I'm also a resident of Panama, which is a tax-free country. Well, not really. It's actually, they tax for domestic income, but I have no Panama income. So it's a territorial tax system. They only tax you money you make in the country, and 100% of my income is outside of Panama, so that's tax-free. Yeah, there are places to go. Singapore and Switzerland, both beautiful. I've been to both of them. I've never been to Switzerland. I've been to Singapore several times. I used to be a pro golfer. I used to play tournaments in Singapore and all over Southeast Asia. Yeah, Canadian taxes, brutal. And they're even proposing now of rolling back and eventually within a few years getting to a point where they're, your primary residence, as long as you're living in it and it's your primary residence, it's tax-free as far as capital gains go. The Canadian government is actually in a proposal right now to start rolling that back to make primary residence taxable, and they can do that because honestly, like the boomers are going to get hammered by that policy, of course, right? But Canadian real estate is so expensive right now that the younger generation, anybody under the age of 40, the average person couldn't possibly own a home. So as far as a voter turnout, a lot of the young people are going to vote for that. They're going to be like, well, I don't own a house. I'm not going to get to own a house. So let's tax those people who have houses, right? So the government's basically going to have to do that calculus. Do I want to lose the boomers by, maybe they bought a house for $200,000 in 1990 and now it's worth $2 million and they're going to have to pay capital gains on that. I don't think the younger generation is really going to care very much. So it actually might go through, which is just bizarre but it is what it is. The Trudeau government they've got their plans and they are partnered up with the Socialist program or the Socialist Party as well. And, off to the races. So Canadian tax rates are going to get even worse. No thanks. Love Canada. I'm Canadian. Love it. Absolutely love Canada. Vancouver's one of my favorite places in the world, but taxes, brutal. So here we go. This is kind of what I said. We're not so sure what the market's going to do. You kind of have to wait for it to run its course and everybody to kind of run their own numbers. What's it looking at now? Now it's down $100. Gold's still up, so that's decent. I'm in almost no positions right now. I'm basically have been flat for a little while here. Not a whole lot of conviction on either side of this market. So, all right. So hopefully you got your trade on, and now we need a 5% move in either direction. So there's one more here, Uruguay. Really good, pretty accessible place for digital nomads as well. So that's a good call. You've got this, the standard places, Thailand. You've got all the little islands like St. Lucius and all those places that'll do the somewhat tax-free or very close to that. You've got Montenegro, which is a good one. A lot of people go there. Portugal, it's not tax-free, but it's very low tax rate, and you can buy into it. Ireland, good place. Yeah. And there's some options, but definitely look into Dubai. It's a fantastic place. All right, everyone. I had a super long day, so it's almost 2:30 in the morning. I'm going to go to bed now. So thanks for checking it out, and we will do another one very soon. See you later.